The Trump administration told Chevron to wind down its operations in Venezuela by December, in what appears to be the latest push to oust leader Nicolas Maduro. Chevron is the last major US oil company still operating in the country. The US Treasury Department gave it a new limited license on Tuesday that exempts it from sanctions on Venezuela's oil industry. But it will allow so little activity it may be hard to stay there. The waiver won't let Chevron drill, sell, or transport Venezuelan oil, and it must wind down its joint ventures there by December 1st. Chevron's shares fell sharply over the last 2 days after US crude futures on Monday fell into negative territory for the first time in history. The recent plunge in oil prices has crushed Latin American economies and most affected Colombia and Venezuela because their tax revenues depend on the value of their oil exports. Analyst Luis Oliveros explains.
Venezuela sells oil at a discount because it has no one to sell oil to. It has no one to buy gasoline from, nor the necessary additives for a refining system that is practically at a standstill. It does not have the money to import fuel, and neither does it have the freedom to buy fuel from everyone. Today, this is the reality of the Venezuelan oil industry, which is generating countless problems for the country's economy.
The US sanctions were introduced last year and were designed to starve the country of oil dollars and oust socialist Nicolas Maduro. Since then, oil exports have dropped by a third. But Maduro remains in power, and some US officials say this has been a growing source of frustration for President Donald Trump.